Hello, guys. Good morning. It's 9:10 a.m. here, and that's about 8:10 a.m. UTC. And I'm very excited to welcome you to our final edition of the Forex Morning Mastery for the week. Well, today we are running into the final trading day of the week after taking on some interesting position during the course of the week, and we've done fairly well so far. And I must commend every one of you who has been part of this journey in the last four and a half days. Well, today being the last trading day of the week, you know how we do it. We are going to be taking into account the fact that majority of market participants will be rounding off their trading activities ahead of the weekend. And of course, in that regard, we're we're also going to be looking at the fundamentals as well. Remember, we've been monitoring four instruments. We had the USDJPY, the GBPUSD, crude oil, and of course the gold commodity. And this week has been all about uncertainty and caution, especially from the US government shutdown to shifting central bank signals and, of course, geopolitical risk. And that makes us kept market a little bit choppy, especially in the last 48 hours, pushing traders to home. So today is going to be a deciding moment, and what we are going to be doing here is to see how we can strategically position ourselves for the next move using the fundamental and the technical factors to guide our decision making. So if you're a fan of any of these assets we are talking about, you want to be stay tuned in. We don't want to miss out any of the ideas we will be deliberating on today. And for those of you who are joining me for the first time, you are highly welcome on board. Very excited to have you here with me. And of course, we run this 3 times in a week: Mondays, Wednesdays, and of course, Fridays, right? And I hope today will be an insightful session for you, a convincing one. Once again, you're welcome. And with that said, let's delve right into the business. Now, one of the things we usually do every morning when we come here is to keep tabs with the behavioral pattern, behavioral situation, US dollar market dynamic. It's very, very important. And the reason is basically because the US dollar has a significant effect on all of the assets we are monitoring. That is the Japanese yen, the crude oil, the gold commodity, and of course the pound sterling. And with a little bit of understanding of what is going on there, we could project what is likely going to happen during that day's trading session. Now, what you see on my screen is the DXY, and for those who are joining me for the first time who don't know what this is, the DXY is an asset that gives us an insight into how the US dollar is performing. And what you are seeing here is the 4 hours time frame. And of course, the structure here, remember at the beginning of the week we saw price break out of the resistant line of that descending channel to emphasize a bullish trend, right? And prior to the beginning of last week and right before that breakout happened, we had an ascending trend line. So this is it right here. So we had this ascend, and you know how we use our ascending trend line. As long as price remains above it, we do want to be looking out for patterns and structures that support buying ideas, right? So this week we saw price break out of the structure, come back to retest it, and then we saw the significant breakout of that resistance line of the descending channel. And as it is right now, the market is doing a little bit of rejection here. As you can see, the last 24 hours, buyers have found it difficult to break out of the $99.57 level. And I want to begin to think that we might be on the verge of some profit-taking activity ahead of the weekend. And that definitely will be a platform for next week. And if we look at the way things are going, and from a theoretical standpoint, whenever price breaks out of a key structure, descending channel, we do expect that some point in time price is likely going to come back to retest the descending trend line. And look at how beautifully that trend line shares a confluence with that ascending trend line, making it a sweet spot where we could be seeing a potential retest that could incite the next wave of bullish momentum. See how things are gradually unfolding, and at this juncture, the question here is whether this move is going to happen today. And if we consider today being the last trading day of the week, where it is expected that market participants will be doing some profit-taking activity after a profitable week, this is looking very much likely. Now, how far will that go? We don't know. And it's not all the time price does this. We may not see that move happen, and instead we see price break out of this structure at the $99.50 level, maybe after an extended sideways trading activity. It could evolve into an uptrend continuation pattern that could break out the structure to incite the next leg of bullish momentum. So you would agree with me that we are at a critical juncture. And if we take into account the recent developments in the global landscape, especially if we look at how the dollar had increased since the beginning of the week. I talked about this on Wednesday while discussing the idea behind that bullish momentum, right? And during the course of the week, let's look at the economic calendar. We had a bunch, in fact, a lot of Fed officials speaking. We had the Schmidt, we had Bostic, Bowman, Miran, Kashkari, a lot of them who spoke this week. And several of the speakers emphasized that inflation still deserves respect. And they also went on to caution against rapid rate cuts. In fact, who was that again? I think Barr on Wednesday said that the current policy stance already leans restrictive, and future moves depend heavily on economic data, right? Now, that for me gives the dollar some backing. It gives the dollar some support as markets see less urgency for aggressive dovishness, which definitely had been supporting the strength of the US dollar. And with the US government shutdown in place, we saw that throughout the week there are many key reports that were missing and delayed or uncertain, let me put it that way, because we didn't have the jobs data this week, initial jobless claim count. We usually get that on Thursday. No inflation reports. Definitely all of this is happening because the US government is shut down. And this absence of data, traders lean on what they do have, which is the Fed signals. And this is coming from the Fed officials we saw this week, and risk flows, which tends to favor safe bets assets like the US dollar. Then another factor we cannot ignore around the US dollar market dynamic is the uncertainty from geopolitical tensions. We have the Middle East scenario, we have the Russian-Ukraine situation. In fact, we have political tensions in Europe and Asia as well, which are making their own currency less attractive at the same time. And this is giving the US dollar some edge. So the US dollar is benefiting from that safe haven demand at this point. And for me, I would agree that the path of least resistance for the dollar still remains to the upside. Now, what we are not sure of at the moment is what path to take. Are we going to see price retrace this week or this today before the next wave happens? Or are we going to see price break out of this resistance at the $99.50 level to incite the uptrend continuation? But as it is, this significant breakout we saw here on Wednesday attracts momentum from traders, and of course it's going to be adding fuel to the upward movement. So to simply put, dollar's momentum is now getting some technical support, not just from fundamental backing, as you can see here. So with this information we have gathered here and having a deeper understanding into what is driving the current market sentiment, let's go into the assets we're monitoring so far this week. Now, another thing I also want us to take note of is the upcoming publication from the University of Michigan. That's the Consumer Sentiment Index. It is coming in by 2 p.m. UTC. That's about 3 p.m. local time. Now, I'm not sure if this report is going to come due to the shutdown of most of the government agencies in the United States. But since this is a university publication, let's see if the data is going to be coming out. And if it does, it's going to be giving market an insight into consumer spending in the United States. So mark out that timing. We have 2 p.m. UTC. So moving on, we will be diving right into the business for today. And of course, the first asset we are looking at is the USOIL spot, right? And this is a 4 hours time frame. I will not really go into that. We've talked about this on Monday and Wednesday. So what I want to focus on now is the technical structure that I am using to navigate this market today. Well, from an holistic perspective, it's looking like the USOIL spot is on a downtrend. And as you can see, this descending trend line after connecting the series of lower highs further confirms that. But one interesting thing about the structure is how price is yet to find a lower low, right? The lowest point price has gotten to is the $60.20 level, just right here. And as you can see, since the beginning of this week, though we had some choppy conditions, price is yet to break down that structure. And if we look at it technically, it appears that price is finding some higher lows at this point in time. Look at that. So what does this tell us? It tells us that despite the fact that the US crude oil is looking bearish, buyers are finding some levels to capitalize on. So now let's go to the 1 hour time frame. It will give us a clearer picture of what is going on in this market. So let's look at this. We saw price started the week here, and then it culminated at around the $60.50 level, and oil prices slipped through Wednesday, Thursday's trading session, and this momentum we saw here was pressured by the easing Middle East supply fears after progress on the Gaza peace plan. So we saw Trump announce yesterday that there has been some progress to that, and added to this, there are worries that a prolonged U.S. government shutdown could weaken demand in the world's top oil consumer country. U.S. is the world's largest consumer of crude oil, and this definitely will keep prices suppressed. depressed. People are not going to work, the government is shut down, activities will drop definitely, and this will lead to reduced consumption of crude oil. Now from the charts, repeated failures near the resistance points to more downside risk for me. Now look at this. Buyers were unable to break out of this $62.50 level on Wednesday. The same thing happened yesterday, as you can see. And thirdly, price is trading below the key level we marked out at the beginning of the week at the $61.50 level. So for me, it appears that the path is still to the downside. Now, to help me navigate this market today, I do have a simple trading setup. I did share this on my Trading View and Telegram platform, as you can see here. So if we look at what has been going on in the last 18 hours, it appears the market is doing a consolidation, right? Price has been confined within the $61-ish and the $60-ish here to emphasize the prevailing uncertainty going into today's trading session. Now, I already had the sell position triggered. If you look at the bottom of your screen, I have a sell which is currently running with a very small profit, as you can see there. But it appears that buyers are beginning to gain some traction. Look at what is going on here. Price is just right above that new ascending trend line I shared with you on the 4 hours time frame. And the last candle here is an engulfing bullish candle, as you can see here, springing out of the structure, and this is giving a sign that maybe buyers are on the verge of taking price out of the structure. So for me, I still have a sell running at the moment, but I would like to wait and see if there are any confirmations that sellers no longer have a chance, right? So at this point, if you are yet to take any trade at this juncture, I will be suggesting that you wait for if price still drops back below the $60.80 level, it could be a sweet spot to sell, just right down here, and then having the stop loss right above this descending trend line and that $61-ish area. That will be dovetailing to about 30 pips of stop loss. So I still lean towards a bearish perspective, except if I begin to see signs of sellers losing momentum, maybe a series of higher lows here, and sellers finding it difficult to break back down below the $60.80 level, then I can consider some buy. And if price goes on to further break out of this descending trend line and the $61.175 level, then this will give me much more confidence to continue the uptrend move. So at this moment, I still maintain my bearish bias, and if you're yet to join, selling below the $60.88 level is looking promising at this point. So there you have it. That's what I'm looking at today on the US crude oil. It's a simple trading setup. Let's see how this is going to play out going forward. And please note that if price moves close to where this lowest point is, we will be having about 20 pips by then. Move your stop loss, secure the current position, worst case scenario break even, just to ensure that in case price reverses, we have been taken out with at least a break even on this trade. So that's my view on the US crude oil. If you have any question or you need some clarifications, feel free to let me know in the comment section. All right, so I will take about 5-10 seconds off. Let's see if there are any questions before we move on to the next asset on our watch list. Stay tuned in. All right. So, no questions in the comment section. So, I guess we are all on the same page, right? If you have any questions, you can still drop them in the comments. I'm open to hear from you. So, with that said here, let's move on to the next asset on our watch list. So the next asset we are looking at this morning is the GBPUSD, the pound sterling against the US dollar. And of course, you can see that since the beginning of the week, the pound sterling has continued to lose momentum. That is, the dollar is gaining traction. We saw what happened on the DXY chart to further emphasize this. There is an increase in safe haven demand due to the geopolitical tensions, the US shutdown, and the likes. And if you remember in my video on the GBPUSD last weekend, I went on to share with you what the structure is looking like after taking into account the character of price action since the beginning of September. And it's quite interesting that we saw a descending channel, right? This is the resistance line here, and price, fortunately, is still staying within the descending channel, and this further confirms the strength of the US dollar, right? It's been dropping significantly, and the pounds appeared, if you look at what has been going on in the last 24 hours, the pound is trying to bounce back after this 3 straight days of losses, as you will see here. All right, and let me zoom in so we can see things clearly. So look at this. This is the last 24 hours. So each candle here is about 4 hours, and we have 1, 2, 3, 4. Okay, last 20 hours thereabout. And this whole scenario we're seeing here, that is this whole choppiness and this buy pressure we see here, could be attributed to the comments made by the Bank of England policymaker, that is Catherine Mance, who went on to mention that that interest rates needs to stay restrictive to fight inflation, right? And UK's tough stance on public spending is also seen as supporting stability at this point. So I want to believe that the market is reacting to Catherine Mance's comment, and as a result, a lot of traders are looking very cautious at this point. So no one is selling anymore, as buyers appear to be gaining some traction from this point. And in fact, we will see things more clearly when we scale down to a much more lower time frame. And of course, you must have seen my updates on my Telegram and TradingView platform. For those of you who are following me, we have a simple structure on the 15 minutes time frame. I think it's a wedge pattern. I see a wedge. I don't know. What do you see? Maybe you let me know in the comment section. So this is what I see here after this strong bearish move to the downside. So you can see price moved all the way the last 24 hours, moved down, then went into a consolidation that formed this wedge. Some might call it a flag pattern. Some might even call it a pennant. I'm not really good at these patterns anyway, but it gives me a structure that says that the momentum is looking very bearish, as this could be considered to be a downtrend continuation pattern. And if we consider the strength of as it draws strength from the ongoing government shutdown and risk aversion, the mix leaves USD caught between recovery hopes and the US dollar strength. Now, if we look at things from a theoretical standpoint, We expect that price breaking down the structure will confirm a down. Price could come back, retest the structure in an attempt to continue which is still in line with the script I have. So if you look at the bottom of your screen, I do have two sell positions. I had one running since yesterday. I think one triggered yesterday. I placed a sell stop order on Wednesday and it got triggered yesterday. As you can see, that one is running in profit, and I already moved the stop loss on that one to 1.33160, somewhere just right above this area here to secure that position, as you can see. Now, after marking out this structure this morning, I placed another sell below the 1.331 as I have suggested. If you're taking that trade, you must have a sell position triggered by now, though it might not be in significant profit, but it's still running at this point. And for that position, our stop losses will be right above this structure, this 1.33150, dovetailing to about 6 to 10 pips of stop loss. Okay, and we're looking to add more if price can break down this 1.32880 level. So let's mark that one out just in case, so that we don't forget. 32880 level, right? So I placed that there. So we have another sell stop order below the structure. We can use this to maximize the profit on this one. So by the time price drops below the 1.3288, we will move all the stop loss of the other sell positions to the second entry point here, so that the only exposure we have in the market will be this third one below the 1.32880. So let me place that sell stop order there. I hope I'm making myself clear. If I'm not, please let me know in the comment section. I can afford to clarify it further. Okay, so we have so I just placed my sell stop order below the 1.32880 level. Okay, now you know how we do. Much as we looking very bearish, we cannot ignore the potentials that buyers can also come into play, right? Buyers could come in at any point in time. If they do, how do we intend to capitalize on this? Now, what are the factors that will support the buyers? Well, I told you earlier, I talked about Catherine's comment and the idea behind the fact that Bank of England is not intending to cut interest rate any further, which could give the pound sterling a boost. And if it does, that's one. Then secondly, the market has been on a downtrend since the beginning of the week. It has been on a strong downtrend. And when it comes to the final trading day of the week, we are likely to see profit-taking activities. Those who had sold all the way down must have made some massive profit, right? And because of this, they might want to start taking some profits from what they have gained, and this could lead price back up before the week closes. So if we take this psychological expectation in conjunction with the Catherine Mann's comment yesterday, we could see buyers come into play. And if they do, where do I want to buy? Well, if I want to buy at this juncture, I would like to see price take out the resistance line. We can see what has been going on here in the last 15-18 hours. This area had been a strong selling niche. Look at this. And ever since price broke down yesterday, buyers have been finding it difficult to break through, making it a solid resistance line. So if we see price break out of this structure today and possibly do a retest of structure where the inability of sellers to push further down will definitely confirm that buyers have come to stay, and that for me could be a signal to join a counter trend move. Okay, so if I'm going to be buying, definitely I want to be looking out for buying opportunities above that resistance line. Now, another thing you need to also consider here is look at the lowest point here, and then look at the second attempt by sellers to break through. Is right here, forming a higher low double bottom structure where this 1.33150 could turn out to be the neckline. So let's take this into account. I'm not going to be buying unless the 1.33150 gets broken to the upside. So I hope I'm making some sense here. If I'm not, I'm willing to expatiate further. So that is what I'm looking at on the GBPUSD. So I have two sell positions running. I told you I've moved my stop loss on the first one. I'm waiting for the second one to move further. If it drops below the 1.32288 and that third position gets triggered, we move all the stop losses of the other two cells to the entry here. So let's see if there are any questions before we move on to the USDJPY. All right, I guess we are clear on that one. So let's move on. I wish you the best of luck on the GBPUSD. And if anything new comes up, I will be updating on my Telegram and TradingView platform. So best of luck on that one. So the next asset we are looking at is the USDJPY, and this is one of the most profiting this week, right? We have been buying the USDJPY since the beginning of the week. Let's zoom in so we can see things clearly. For those of you who saw my weekend video, I told you about this beautiful ascending trend line on the 4 hours time frame, and if you saw the video, I mentioned that I'm looking to buy the break of the 147.5. Let me show you what that is looking like on the 4 hours time frame. So this is the 4 hours time frame here. After capturing that ascending trend line, we went to as far back as April, right? And you know how we use our trend lines. As long as price remains above them, we continue to look out for patterns and structures that support buying ideas. Now, for me, prior to the beginning of the week, this was where price was at the beginning, as in when we did the analysis during the weekend. So I said I wanted the break of the 147.5, but unfortunately, I missed out on this whole 250 pips move. This whole move, I missed out on it because the move happened during the Asian session, right? And of course, I was fast asleep when this was happening, so I missed out on that one. And I did update us on Monday that let's wait for new structures to emerge before we consider the next move. Now we could be seeing price retrace back to retest, or an uptrend continuation could emerge. And lo and behold, we were able to spot a range bound structure on our execution time frame, right? On the 1 hour time frame. So right here, live session on Monday, that we had a range where price was confined between the 150.450 and the 149.950. So we had a buy stop order above the resistance line and a sell stop order below the support line. The sell stop got triggered. It didn't do very well. We got taken out in a loss on that one. And then the buy position got triggered. And then we were able to recoup the loss we incurred. And boom, price kept on moving to the upside. I think price moved over 200 pips, over 250 pips to the upside. Now, something interesting is going on the USDJPY. So since price tested the 153.250, look at what is going on. Buyers have been finding it difficult to break through. Look at that. Every time they come in, sellers come in to push price. And the same thing also happened for sellers. Sellers were unable to break through the support line. Look at this. Buyers keep coming in. Despite the resistant line being tested. As you can see, we saw a sharp one here, and the last 3, 4, 5 sellers are still yet to break through that area. So what does this mean? It means that we have a consolidation going into today's trading session, and that means that the indecision in the market is very glaring. The yen at the moment is, let me say, it's inverse, right? So the yen at the moment has found some support, especially this yen is finding some way to stop the USD's growth. It's due to the remarks from the finance minister. So this morning, he warned against excessive moves in the currency. While markets still see chances of a Bank of Japan rate hike later this year, market could also consider the comment from the intervention could come in. Remember, if you have been trading the Japanese yen for about 3-4 years, it's around this time that we usually see Bank of Japan coming in to intervene, pumping money into the market. I think last year was around September. A couple of years ago was around October, November area, and we are right at that time. Anything could happen, and this is further causing the indecision we are seeing here. Then we also have the political uncertainty in Japan, which also adds another layer of, and that is limiting big losses for the yen. Meanwhile, the dollar remains strong, but faces some pressure from the Fed rate cut expectation and the US shutdown. So the overall condition on the USDJPY remains range bound as traders weigh safe haven flows against policy outlook. Now, in this indecisive phase, I was able to spot a simple structure to help me navigate the market. Sold this above here, and it has gone into a loss again. So right now, what are we going to